In this episode, we speak with Randall Eason and Keoni Schwartz, co-founders and managing directors at Altamont Capital Partners, a private equity firm focused on transforming and scaling lower middle market companies through deep operational expertise and value creation capabilities. Since its founding, Altamont has invested in over 45 companies across the industrials, business services, financial services, and franchising and multi-unit sectors, with more than $4 billion in capital under management. Randall leads investments in the industrials and franchising and multi-unit sectors. Previously, he was a principal at Golden Gate Capital and held roles at Bain & Company and Williams-Sonoma. He holds an MA in sociology and a BA in economics, Phi Beta Kappa, from Stanford. Keoni leads investments in the financial and business services sectors. He was formerly a principal at Golden Gate Capital and began his career as a consultant at Bain & Company and the Bridgespan Group. He holds a BA in history with honors from Princeton. Altamont was recently recognized by GrowthCap as a top private equity firm of 2025. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Randall and Keoni, thanks so much for taking the time.
Yeah, happy to be here. Thanks for having us.
So it's evident that the two of you love working with each other because your careers track almost identically from undergrad. Obviously, you went to different undergrads, but then right after Bain, Golden Gate Capital, and then Altamont. So maybe to kick off, tell us a little bit about that. Did you both know each other since graduating undergrad?
We actually started the same day, our first job out of college at Bain in San Francisco together. So yeah, we've been working together for almost 25 years now. Hard to believe.
Tell us a little bit about that. I mean, I'm not sure if it was as intentional that you would go to the same firm subsequently, but had you been kind of discussing kind of your career aspirations as you were coming up in these firms?
Yeah, I think we certainly were discussing it. I first joined Golden Gate kind of way back in the beginning, and I had been on a Bain & Company, actually a retainer team that was working with Golden Gate Capital. They recruited me off that team, and then they replaced me on the team with Randall, actually. And not too long after that, Golden Gate hired Randall. So it was funny because I think after that, Bain stopped staffing people on that team that they thought might have interest in going to private equity long term. Yeah, and I think if you think through starting something, doing it with somebody that you trust a lot and have personal connections with, it's hard work what we do and starting a firm, but doing it with somebody that you have known for a long time and trust a lot makes it that much easier.
And then tell us a little bit about, and we'll head into Altamont and everything you're doing there and go into specifics, but the beginning of it was, I think, 2010. How did it all come together?
Yeah, well, our co-founder, Jesse Rogers, was one of the founders of Golden Gate Capital, which is where Kay and I started our private equity careers. And, he had a vision of starting a new firm with a specific strategy and a point of view around culture and approached us about joining him. And I think we were all highly bought into that. And that was the impetus behind starting Altamont, as you said, in 2010. So we just celebrated our 15-year anniversary.
And it was evident, I guess, to him that you two were the right people to start the firm with.
Well, we'd like to think so, for sure. I think, part of it is that we, of a different generation, I guess, than Jesse, and he was looking at building a firm that could succeed and win, in the long term in our strategy, which is, business building in the lower middle market. And so picking people to join him that had, worked together for a long time, but still had a longevity in front of them, I think was important for him and important for us. And I think given the shared history at both Bain & Company and then at Golden Gate, as well as just the personal friendships and relationships and trust that Randall mentioned, outside of the office, I think was made it a logical choice.
Was there kind of a distinct difference in kind of what the new firm would undertake? Or was it more just a cultural thing, like I'd rather work with this set of people and kind of do the same thing?
It was a little bit of a return. So at Golden Gate, which was a terrific firm and, great success story, it started as a smaller firm, right? It was more in the lower middle market, running a sub-billion-dollar fund with a very similar strategy to what we have today at Altamont. But as the firm grew, it was very successful and raised a lot more money. And when you have a lot more capital, it kind of forces some changes strategically, right? In terms of how you invest and you're doing larger deals. It's a little bit harder to do the same kind of family founder owned deals that is so core to our strategy. And so a big part of it was Golden Gate has been successful for a long, long time. The strategy that we really espoused and really thought, would succeed throughout cycles was what we were doing more in the first 6, 7, 8 years at Golden Gate, and really what we wanted to recreate and build a firm that could succeed there in the long term. And then the culture element was a big part of it. There were great people back at Golden Gate when we were there, but we wanted to, have a culture that was slightly different and probably a little bit more reflective of who we were as people.
Mm-hmm. And I think you focus on different areas. Maybe we'll go into kind of what each of you specialize in. It seems like it's maybe divided by sector.
We both focused on different sectors at Golden Gate, and that's carried through to Altamont. So my background was in the industrial space at Golden Gate, and then likewise here at Altamont, and have also spent time with some of our multi-unit franchise investments.
Right. And my background, for the past 20 plus years of investing has been primarily in financial services. And then I also spend time in some of our more white collar professional services on the business services side.
This is a crowded market. I mean, private equity is only getting more competitive with more participants. Overall, private markets continue to expand. How do you differentiate, like when you're talking to a founder, CEO, or management team, how do you kind of differentiate Altamont? And I'm not sure if it'll vary based on which sector we're talking about, but is there maybe a general pitch and then a specific pitch based on the sector?
I think you hit on it, which is you have to have a point of view, especially with a founder family-owned business, on why you're the right partner. I think it starts with sector expertise, which we talked about. So they want to know, do you understand my business? Have you invested in similar businesses? Do you have resources from a sector perspective that you can bring that can help with the business? And so that's why we're focused on a tight set of sectors. And within those sectors, we feel like we have the experience and the expertise to help those founders and families. But then I think where we really differentiate is on the business building side. And that's the core of our strategy, which we call transform and scale. So the transform piece is take what's a great business model, but probably not what we would think of in the private equity world as a platform, as a business that can really aggressively grow and do acquisitions and the like. And so we bring a tremendous amount of resource and experience in doing that business building and doing that transformation to those types of situations. And then the second piece of that is scale, which is growth. And that's driving organic growth and then growing through add-ons. So I think it's really the combination of sector expertise and then the business building skills in terms of transforming and scaling these, especially situations where we might be the first institutional capital, that help us differentiate with those types of sellers.
Yeah, just to kind of reiterate that's really the formula, right? For Altamont, the kinds of deals that we do, it's a strong business model, in industries that we know really, really well, that we've been investing in for a couple of decades. It's companies that have the potential to be a larger platform. And we're invariably the very first institutional capital. And these are situations where we really partner with management teams to both transform the business, right? Turn it into a real platform, and then scale it through a repeatable sector playbook, right? That's got demonstrated track record, and we've got dozens of case studies across the board.
Mm-hmm. I think what can help make it a bit more tangible is if you have an example, maybe like there's a company you worked with where you really felt like you were able to bring a lot of value to the team and you ended up with a great outcome.
Sure. Maybe I can talk about Accelerant, which is a Fund 3 portfolio company. It's actually the largest investment that we've made as a firm. So what Accelerant does, it's a digital risk exchange for the property and casualty insurance industry that we actually started from scratch in partnership with a really exceptional management team. And so what the business does is it connects specialty underwriters on the one hand with access to risk capital and doing it much more efficiently and transparently than kind of the legacy models there. and then it receives a fee for providing that connectivity. And while, it's a pretty unique strategy in private equity to actually start businesses from scratch across both Altamont and our predecessor firm at Golden Gate, we've actually done this about a dozen times in the financial services sector where we built businesses from the ground up. And like in other sectors, we do have a proven playbook and track record in doing that. And that playbook includes everything from things like as simple as forming entities and receiving regulatory licenses and credit ratings to, it's really recruiting and then building out a management team, selecting and installing appropriate systems and even to things that are like seemingly mundane, right? Like setting up bank accounts and payroll. And I think with Accelerant, it's a great example because when we executed against this playbook, it allowed us to back a UK-based business that started with 0 employees. It was 3 great executives with an idea and no revenue at the beginning of 2019. And we worked alongside them to transform it into what's now a global business. It writes almost $4 billion of premium through its risk exchange system on a run rate basis today. And, maybe most notably, we recently were actually really fortunate to be able to ring the bell at the New York Stock Exchange as Accelerant went public last quarter in a really successful IPO. And, that was the first IPO for us as a firm. And at least as we've been told and understand it, it's pretty rare for mid-market PE firm, under $1 billion fund to have a public offering like this. So I think it's a great example of the kinds of things that we do on both the transform side, actually building a platform from scratch, and then scaling it using the sector playbooks that we have.
That's excellent. I'd like to ask a follow-up question there, and then we'll switch over to Randall. But the question is, does that only happen in certain circumstances? Meaning, like the 3 people that you were backing there, they had already proven that they could do this?
Yeah, they were proven operators and in an industry that we really knew well, where we could see a real dislocation. So, people look at it and say, well, you're starting a business from scratch. Isn't that more VC? And when we say, no, it's not, because it's not like we're taking product market fit, right? We know for a fact that there is a business model here that works really well. If we can actually come in and create a better version of it, right? By not being burdened by legacy liabilities or by legacy technology systems. And in financial services in particular, there's a lot of legacy technology systems that some of the larger players, are burdened with, and it's harder for them to operate, be much more nimble on. So we look at it and say, we've got a great management team. There's a dislocation in a market, and we can actually create a platform that's going to out execute the legacy provider. But it has to be, that combination of things. It has to be the great management team. It has to be that dislocation, and it has to be an area that we can think we can really add value with the ecosystem and network that we bring to bear.
As you look at your kind of portfolio today, or maybe it's within kind of the sectors you operate in, how often does this occur that you're starting, companies from scratch?
We've done it about a dozen times in total over the last, we started 2002 was the first time. So over the last 20 plus years. So it's probably 1, maybe 2 in a fund. So it's not the majority of the deals that we do. I think the majority of the deals that we do, even within financial services, tend to be more what we described earlier, which is a family founder-owned business that isn't quite a platform yet, where we're buying a majority interest in the company. The sellers are rolling a substantial amount. We're helping them build to the next level. But unlike most other private equity firms, we are willing to look at situations where we're starting something from scratch. As you can imagine, it tends to be pretty resource intensive to do that. So it would be hard to do 10 deals in a fund, as an example, if they were all these de novo platform builds.
I'd like to switch over to Randall and maybe hear a situation that you are particularly kind of fond of how Altamont showed up to the situation.
Maybe I'll mention an example of a founder family-owned business on the industrial side. So a company called CBBC, or Colorado Box Beef, which is an example of what we do in the specialty niche distribution space. In this case, a specialty protein distributor. So they would sell meat, seafood, poultry, pork products, and the like to grocery stores and food service outlets, cruise lines. Not nearly as sexy as a digital risk exchange, but a great business, a market leader in the Southeast, which is what we like, where a distributor has a very strong presence in a specific region, and just a really nice business, very high return on net asset, which is one of the key metrics that we look at in distribution and in a very fragmented space. So we began with a family-owned business. We sourced that through an industry relationship of ours, and it was really a bilateral deal where we partnered with the CEO and one of the family members to provide liquidity to the rest of the family and other shareholders. It was a terrific business, but it was a pretty thin team. And so there was a lot of business building that we worked on with the CEO, who's extremely capable, but We helped him build out the finance team, the marketing capability, and a clear growth plan. From there, worked on asset efficiency, so freeing up working capital, warehouse operations, pricing to improve margins, and then several add-ons to drive scale and synergies. Ultimately, doubled the size of the business. We sold it to a private equity-backed strategic at a higher multiple, and that drove a phenomenal outcome for us as well as for our partners in the management team and the family.
And in that situation, were you drawing from your network of executives, maybe that had specific functional expertise for various parts of the business?
Yeah, that's a great point. We have a group that we call Altamont Ascend, which is our portfolio operations capability. And that's a group that includes resources here at Altamont that help coordinate all of our efforts, but then specific operating partners that bring functional expertise in different areas, whether that's finance, IT, HR, talent, operations, and they would be deployed as they were at CBBC to help build those capabilities, work on value creation plans, recruit talent into the companies. And that's a key part of how we're able to add value in that transform phase that we talked about.
And, when you think about the overall Altamont platform, and growing it in future years, when you're seeking to deploy capital, do you divide it up somewhat evenly by sector? How do you kind of approach that process?
We don't budget by sector. And I think part of what we like about being in several sectors is that if the trends aren't favorable, multiples are too high, deal flows down in a specific sector, we can pivot and do more in one of our other sectors. And so that flexibility in capital allocation and deployment, we think is a nice feature of being in several different sectors. But the fact of the matter is that it tends to work out that all of our sectors are active, and in any given fund, we'll tend to have a pretty balanced allocation across our different sectors.
One of the things we like to get from these conversations, because we do have quite a bit of an audience among the younger folk in private equity, is the culture, like what it's like to work at Altamont. Is there something you could share, some insight about the culture? Obviously, I know someone from way back when who works there. He's a phenomenal guy, Kevin Mason, a little bit of shout out there. But if you could tell us a little bit about the culture, I think that would be helpful.
I think you're right. I think for an investment firm to be successful, you need to have a really clear and focused strategy, which we've talked about, but that's not enough. You also need to have an exceptional team and a culture, as you said, to support it. And we certainly think highly of our strategy, but I think our team and culture has been just as important to our success. So at Altamont, it's a very deep, talented, and aligned team, which is something that we believe strongly in. So we're more than 50 people on our investment team and other capabilities. Keoni and I and Jesse have worked together a long time, but just in general, our partners have averaged 12 plus years of tenure at Altamont. And as I said, the team's highly aligned with our strategy. So just as an example there, the investment into the fund from the Altamont employees, it's unusually large for the private equity industry. And in fact, we're the largest investor in our current fund. And on top of that, we have a program that shares the rewards from our investment successes with every employee at the firm, all the way from the top to the lower levels of the firm. And so we take a lot of pride in the alignment that having big personal investments in the fund, as well as a program that shares the gains with everybody at Altamont provides. So I think all of that allows us to be highly aligned with our investors, but also with our management teams, and ultimately allows us to generate great performance as investors.
The only thing I would add is that I think from a cultural perspective, it's really about business building as opposed to financial engineering, if that makes sense. And I think everything that we've set up from an HR perspective, right, whether it's recruiting, whether it's training, whether it's professional development, whether it's mentoring, it's focused on hiring and then developing people whose main focus is how do you make a company more valuable fundamentally, right? Which is how do you build the platform? How do you build the enterprise value? And then how do you grow revenue and EBITDA? And our philosophy is that if you can do that consistently over time, you will have good returns, right? It doesn't matter what's happening in the capital markets. It doesn't really matter what's happening in the leveraged finance markets. And I think it's one of the hallmarks that we've been able to have and be successful in is that the returns we've had have been consistent, right, across cycles. And, we've been together since the dot-com crash, in the early 2000s, and seeing the global financial crisis and seeing COVID and seeing the flash crash. And one of the things I think we're most proud of is that if you can build that fundamental repeatable value, your returns are consistent over long periods of time. And so we really hire, screen, train, develop, motivate people based on that business building as opposed to any kind of financial engineering or Excel modeling, which I think is different than a lot of other firms.
The other thing worth mentioning alongside that is if you're going to be engaged on the ground in business building and work closely with management teams and with our different capabilities here at Altamont, you need people that are very team oriented. And so we tend to, I think, skew towards people that are of that nature. We have a lot of former athletes at the firm and people that love to be in, team oriented cultures where you work hard together, but you also win together.
We're entering the tail end of the conversation. I have two final questions for each of you. They're the same questions. One is, can you tell us about a person who has had a profound influence on you?
Yeah, for me, I'd probably just have to go with my parents. They always really prioritized our education, and also what I'd call kind of character building family vacations. I remember lots of, road trips to national parks and camping in inclement weather that helped develop us. And I think when I look back at it, I'm incredibly lucky to have been given the opportunities that I have been, and I really wouldn't be where I'm sitting today. And so it's really a shout out to them. They sacrificed a lot, I think, to provide for me and my siblings.
Excellent.
It's such a hard one. I feel like it's the Oscars where I have to thank everyone. And, I'd mentioned my parents too, and my wife, and my brother, and so many people. But I think in terms of influencing my career, I mentioned my grandfather, Sam, who was a self-made entrepreneur and the first person to really teach me about investing. And I think he probably sparked the passion in me to start a business and also my interest in the investing business.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
So during COVID, we actually started a foundation at Altamont as an outlet for our firm's charitable giving. And that foundation, we take a lot of pride in partners with charitable organizations in the communities around our Bay Area and our Austin offices, and then also our portfolio companies' local communities, with the goal to make a difference, both with funding, but also engagement from our people at Altamont. And that's my biggest outlet personally for philanthropy. They've funded a lot of really amazing causes, from college scholarships for some of our portfolio company employees to recovery efforts when there's a natural disaster, the LA fires or hurricanes in Florida. I think in total, we've given over 140 grants to something like 100 nonprofits since we started the foundation in 2020. And to our earlier conversation, I think it's also a great culture builder internally. Is virtually everybody participates in donations and then in the grant process as well.
Yeah, I think Randall beat me to the punch here because the ACB Foundation, it's also my biggest philanthropic cause. And as he said, it's a really huge engagement lever for all the employees at the firm and our portfolio companies to boot. But another ACB cause that we're really big supporters of is Ownership Works. And that's an organization which campaigns for employee-wide ownership at portfolio companies. We've implemented this across a number of our existing portfolio companies, and it's part of the playbook for every new platform that we invest in today. It's really a win-win for both the employees and the businesses because it aligns incentives and it allows everyone to participate in the value created. I guess outside of Altamont, I think the last thing I would say is that having grown up in Hawaii, still spending what time I can surfing in the ocean more generally, I'm passionate about an organization called the Surfrider Foundation, and I'd put in a plug for what they're doing. It's a tremendous organization, really terrific track record of delivering tangible results. So I'm a big supporter there as well.
I was wondering if you were going to mention surfing, so I'm glad you did. Randall and Keoni, thank you again for taking the time. It's been a great conversation.
Really appreciate it, RJ.